I'm not gonna lie, first of all, that's mad creative. Second of all, let's figure out a plan so that you're not working half the year to give your money to the CRA, all right? Let's talk about 3 strategies that you can implement right away. We're gonna break them down based on your tax bracket because one strategy might work for one person, one strategy might work for another. First and foremost, we're gonna start bare minimum, all right? If you haven't maxed out your tax advantaged accounts, please do so. Please focus on that for, I don't know how much you need for the first year, for the first 2 years. Focus on maximizing your tax advantaged assets because what they ultimately do is reduce your tax liability either in the present or in the future, all right? The RRSP is gonna reduce your tax liability in the present through a contribution. The TFSA is gonna reduce your tax liability in the future through a withdrawal. So now the best way, if you're wondering, okay, which one do I start with, is ask yourself one question. Do you think that you will be in a higher tax bracket in the future or in the present? Now, most people ideally will want to be in a higher tax bracket in the future, which is why the TFSA is the one that we love, is the one that most finance professionals, CPAs are going to recommend for you. Even though you're not getting a deduction at the moment, it doesn't matter. Logic will mean that we want to accumulate wealth, which means that we will be wealthier in the future than in the present. Would you rather take a few deductions in the now or be able to withdraw large sums of money? I'm talking about 6, 7, 8 figures of money from investments over the last 40 years, tax-free. The choice is yours, all right? So that's step number 1. Step number 2 is from a higher income earners, if you're earning over 100K, tax plan during the year. I promise you guys, part of the reason why you feel like you're overpaying is because you're not tax planning during the year. You're meeting with your CPA or you're going on TurboTax or going on Wealthsimple before April 30th, probably on April 29th, doing the Pikachu face, the Pikachu shocked face, being like, yo, this is what the CRA is about to take from me. No, what you need to do is before December 31st, but ideally around the September area, at around like Q3, the end of Q3, tax plan with the CPA, project your income over the remaining 3 months so that you know exactly what you're going to pay. From there, you'll be able to figure out tax strategies, whether that means doing certain actions to activate tax credits during the year 2025. Another route would be seeing if you have an SE business or content creation that you've been doing on the side that you can activate deductions for items that you're already using but you haven't been capturing on your tax return. That's going to be another route, but you won't be able to know what to do unless you tax plan. So please, if you're earning over 100K, your situation, your solution is tax planning, all right? Now, the last step is going to be if you are running a business and you're earning over 100K, it could be real estate, it could be an active business. What I want you to do is do the same thing where you tax plan and project your business income over the entire year, which means what you've earned over the last 6-7 months, project that over 12 months so you know your tax position. And from there, you're going to tax plan, but now you have more leverage because you have business deductions. If you haven't incorporated yet, incorporate, because this is going to allow you to take advantage of a lower tax rate based on the small business deduction that Canadian business are eligible for. These are some actionable steps that we can take so that we are not ending up like homie in this video, all right? If this was helpful, leave a comment down below. If you have questions, leave a comment down below. And if we're meeting for the first time, my name is Ronnie Foguet. I'm a Canadian and US CPA who specializes in generating tax savings for my content creators in Canada and the United States. It's been a pleasure. Until next time.